Welcome back to our YouTube channel, The Book Digest. In today's episode, we're diving into a powerful and practical summary of New Trading Dimensions by Bill M. Williams. This is a book that promises to completely change how you see the markets, and maybe more importantly, how you see yourself as a trader. So let's get right into it. So, Williams kicks things off with a pretty jarring statistic. A whopping 90% of all traders eventually lose money. Think about that. This isn't just a tough business, it's a field with an absolutely staggering rate of failure. So that leads to the big question, right? The one Williams spends his entire book trying to answer. If the failure rate is that high, what's the real reason? Is it the strategy? Is it the indicators we're using? Or is it just that the market is impossible to beat? And here's his answer, and it's a bit of a bombshell. Williams argues that the problem isn't out there on the charts or in the news. The real battle, the one that actually determines whether you succeed or fail, is fought right inside your own head. Now, that one idea changes absolutely everything about how we should approach trading. To really understand the market, Williams is adamant that we need a completely new perspective. He argues that all the traditional analysis, the stuff based on simple, linear models, is basically doomed from the start because markets just don't work that way. Instead, he offers a totally different framework, chaos theory. So Williams's whole view is rooted in chaos theory. He doesn't see the market as some predictable machine. He sees it as this incredibly complex system where the tiniest little events can cascade into huge, unpredictable outcomes. You've probably heard of it as the butterfly effect. It's kind of like forecasting the weather. You can't just draw a straight line and call it a day. In the exact same way, those simple trend lines and patterns are just not equipped to handle the true chaos of the markets. To explain this, he borrows this fascinating idea from the physicist David Bohm called the implicate order. The basic idea is that what we see on our charts, the price moving up and down, that's just the surface reality. But underneath all of that, there's a deeper, hidden structure, this implicate order that's actually driving everything. And Will Williams' entire set of tools is designed to help us see that hidden dimension. Okay, so if the market really is chaotic, what tools can we even use? Well, Williams developed his own unique set of indicators, designed specifically for this nonlinear world. And they're not really about predicting the future. They're about understanding the market's structure and its state, right here, right now. The absolute cornerstone of his system is the Alligator. And yeah, it's got a strange name, but trust me, it's a brilliant visual tool. It's just 3 moving averages that are shifted forward in time. And the way they relate to each other tells you, just at a glance, what the market is up to. Is it trending? Is it sleeping? Or is it just waking up? The real power of this indicator is just how simple it is. When the lines are all tangled up, the Alligator is sleeping. That means the market is quiet, it's directionless, it's time to be patient. Then, as the lines start to separate, it's waking up, which hints that a new trend might be about to start. And when those lines are spread wide apart, the Alligator is hunting, and that means we're in a strong, established trend that you want to be a part of. Next up is one of Williams' most original inventions, the Market Facilitation Index, or MFI. Now this is cool. It doesn't just look at price, and it doesn't just look at volume. It looks at the relationship between them. Specifically, how much price movement are we getting for each unit of volume? It's basically a measure of market efficiency, or as Williams calls it, the market's willingness to move. And the relationship between MFI and volume gives us 4 distinct patterns, and each one tells a very different story. A green bar means both are increasing. That's a healthy, active trend. A fade bar is when both are falling, which suggests the trend is running out of gas. A fake bar is a sneaky price move on low volume, a big warning sign. But the one Williams really wants you to focus on is the squat bar. Williams puts a ton of emphasis on this squat bar. This is what happens when volume is super high, but the price is barely moving. He sees this as a huge battle raging between buyers and sellers. All this energy is getting bottled up, and once that battle is over, the price is likely to make a massive move. It's a signal to pay very, very close attention. But like we said at the very beginning, Williams believes that even the best tools are totally useless if the trader's psychology is a mess. So he dedicates a huge part of his work to what he calls the inner game of trading. And he starts with this really simple but profound question. How you answer this pretty much determines everything about your trading performance. Do you feel like the market is out to get you, or do you see it for what it really is? On the left side, you've got the mindset that just destroys trading accounts, taking trades out of revenge or fear or just blind hope. This all comes from taking the market personally. But on the right, you have the professional mindset he pushes for, seeing the market as a completely neutral, impersonal force. It doesn't even know you exist. And that detachment is what allows for objective, engaged, and, believe it or not, even joyful decision-making. Here's the crucial point. Real success comes from finding joy in the process itself, the analysis, the execution, the challenge of it all. When you're motivated by the love of the game, not just the money, you can enter what's called a flow state. And that's where your best decisions are made, and where you build up the mental toughness to handle the losses that will inevitably come. So, how does all of this come together in a practical way? How do we use it? Well, Williams combines his philosophy, his tools, and his psychology into a set of clear, actionable trading signals that he calls the wise man's signals. These are his highest probability setups, really designed to put all the pieces of the puzzle together. The first wise man is an entry signal based on something he calls a fractal, a simple pattern that marks a short-term peak or valley. When price breaks that fractal in the same direction as the alligator, it's a signal to jump on board. The second wise man uses a momentum indicator to spot divergence. When price makes a new high but momentum doesn't, signaling the trend is getting tired. And the third wise man, that gives you the earliest possible warning that the market's underlying momentum is shifting. They're a whole sequence for engaging with the market's hidden structure. Ultimately, New Trading Dimensions leaves us with this final, really powerful question. Bill Williams' message is that mastering the markets is absolutely impossible until you first master yourself. Your beliefs, your emotions, your perceptions, those are the real things driving your results. So the question isn't just, what's the market going to do next? It's, what are you going to do next?